Hello and welcome to our latest update for the Barwon Global Listed Private Equity Fund. I'm Brett Scallon and today I'm joined by Bob Liu, Fund Portfolio Manager. Hi Bob, the fund has had a strong start to the year. What have been some of the key contributors to performance?
Our fund has returned 16% calendar year to date. One of the key contributors has been private equity buyout stocks. The fund has substantially increased its weight to buyouts this year and continues to stand out as offering compelling value. The disconnect between private asset and public market performance is most pronounced here. For our holdings, since the start of this rate rise cycle at the end of 2021, they've grown net asset value by 13% on average. And despite the recent strong performance, their share prices are still down 10% from that same starting point to today. At an average discount of 30% to NAV, we think it's still very attractive. The other key contributor to fund performance has been the alternative asset managers. This may surprise some given the challenging fundraising environment we're in. Most managers we've spoken to have indeed tempered fundraising expectations for their upcoming funds. Private equity is particularly affected and the competition for dollars remains intense. However, private credit and infrastructure strategies remain well supported. So the large established managers with diversified global platforms held in our portfolio have generally outperformed the smaller, more concentrated ones.
And do you think current private equity valuations reflect reality? Are private equity managers marking investments to market?
We've been monitoring this very closely since rates started to rise. My view is that private equity valuations, at least within our purview, remain fairly conservative in general. Two main reasons go to support this. Firstly, since rates have started to rise, we've seen over 150 exits at, on average, 30% above their private valuation. So that's broad-based, spread across managers, sectors, and geographies. And number two, in the last 2 quarters, so it's Q4 22 and Q1 this year, private equity NAVs have grown to the tune of about 3% per quarter. If managers were trying to manage down wildly overvalued assets, they've had a great window to bring them back in line. But instead, they've gone up. There may be specific assets or specific portfolios where valuations are at greater risk of being overstated. But generally, I don't think the evidence suggests systemic overvaluation across the private equity industry.
Bob, you and the team have been traveling recently, meeting with managers around the world. What were some of the notable observations?
In March and May, our team attended over 50 in-person research meetings, visiting companies in London, Paris, and New York. Overall, I'd say that sentiment is improving and macro headwinds appear to be easing. Over the past 12 months, we have seen shipping costs come back to pre-COVID levels. We've seen a normalization of input and energy prices, and wage inflation pressures ease, albeit still remain fairly high. The financial performance of underlying companies, that is their revenue and earnings growth, broadly speaking has continued to be better than expected, but we are starting to see a lot of variability. In our fund, the underlying companies have grown EBITDA in the mid-teens over the last year. More than half of that has been organic, with some contribution from acquisitive growth. And that's been the primary supporter of that 13% average NAV growth I mentioned. So fundamentals remain strong, valuations remain attractive, we think NAVs remain conservative, and so we have a constructive outlook for the year ahead.
Thanks, Bob. And thank you for joining us for our latest update. If you'd like to discuss the fund in more detail, please don't hesitate to reach out to the distribution team here at Barwon. Thank you.